Welcome,
Hi
guys.
guys.
We're
So
gonna
as so as
we're,
we as we discussed, Neeraj
we're
is bunking today.
yeah, and we're going to do a very short session today.
Yes.
Sorry,
Uh,
everyone's stretched and too many earnings and financials to look at. So
yes.
that's the
So
problem.
we'll start with HDFC's maiden bonus expected on Saturday.
Yes,
That's in the history of HDFC Bank, they haven't announced a bonus. So for the investors to give an idea what a bonus is that the company is going to use its reserves to issue shares to the shareholders, and the ratio would be decided by the board when it meets on Saturday, which is July 19th. And as and when if suppose the bank says that I'm going to give you 1:1 bonus, it basically means that you'll get one share for every share you hold, and at the time of record date or X date, the share will half in price because the total value of shares that you carry remains the same. It's also there is another concept of stock split which comes into play. The stock split is when the face value of the share is divided. So normally a 10 rupee share can be divided into a 5 or a 2 or a 1, and based on that, number of shares you gets added to your portfolio, but the total value of holding of your share remains the same.
yeah. They've done enough stock splits
Yes,
through their
I think
lifetime.
two or three they have done
Yes,
already.
so they've already done it. I think the face value is already rupees one, so it's
Yeah.
difficult to do any splits from there. So they've done a bonus. The other piece is the fact that they don't need growth capital at this point.
Hmm.
HDFC Bank, if we just take a step back,
Hmm.
hasn't grown too much over the last couple of years, and therefore all the profits that are coming in
Hmm.
are actually either sitting in cash. Typically, as a company, of course, as a lender, they lend that cash out, but as a company, they are holding on to that cash, and
You know,
therefore
it's
they have the
it's
bandwidth to distribute.
especially after 2023,
Yes,
we're facing this issue of growth not being to
correct.
optimum level which is there, but contrast it to SBI,
Yes,
which is coming with a QIP of 25,000 crores, and which is expected to be closer to the market price.
yes.
So, on one hand, you have the country's largest bank who needs more capital to grow. On the other hand, you have the country's largest private sector bank
Or
who
the
has
second largest bank
second largest bank who has excess capital, so it's giving it away to the
to
investors.
shareholders. Yeah, yeah, yeah. So it won't hurt capital adequacy. Likely won't hurt growth as well for an HDFC bank, and therefore they're doing this.
I think the
I
return
think it's
ratios
a
will be better.
sensible call. I think it's a
Return ratios
sensible
will be
call.
better once you give an
Yeah,
interim
of course.
special dividend
Yes,
out.
yes, yes. It will be better because you have a lower amount of capital or a lower amount of cash sitting in the balance
Yeah.
sheet. Both of those, all of that obviously helps the return
So the
ratios.
capital will go up. I think the equity will go up, depending
No,
on
it'll
the
remain the same, sir. From reserves, you'll
no, no,
get transferred to equity.
because of the bonus, you will have the equity base will go up.
So sir, shareholders' funds will remain the same
Same, yeah,
because you'll have,
it will shift there, but the
yeah, it will
equity
just
capital
shift.
will go up
Yes,
basically.
the equity capital will increase. So the authorized or the total share capital, issued equity share capital will go up.
Hmm.
But your shareholders' funds, which typically is used for ROE calculations, will remain the same. That won't change.
Yes. What else we have today? You
The
have a slew of banking numbers coming out from
Yes,
today, tomorrow, going up to Saturday,
yeah.
which is
But so more importantly, there's
HDB Bank,
yes,
HDB Financials.
HDB Financial, HDFC Life, ICICI Lombard, ICICI Prudential.
Prudential.
Those are the big four which came out.
Yeah, so three insurance companies. What is a synopsis for them?
So very concise. HDFC Life in line. I felt that there was a negative bias when it came to the commentary. They were expected to grow at 18%, but what Ms. Padalkar told me is that the higher base, especially in H1 of FY25,
Hmm.
is impacting the numbers for H1 of FY26. HDFC Life grew at nearly 30%, if I recall right,
Hmm.
on the AP
Hmm.
annualized premium equivalent, which is typically the top line equivalent for life
Like,
insurance
yeah,
companies. It grew at 30% in
that's
H1
not a bad number to
FY25,
grow
which
actually,
is very, very strong.
and
But in H1 FY26, therefore, the number will come in lower. And therefore, you will not likely see the 18% growth which they had guided for. H2 was a softer set of quarters for HDFC
hmm,
Life
hmm.
FY25. That she
That's because
see
of the surrender issues, which
Correct.
is
So
fairly
that she's
coming.
saying that there will be a pickup in business in H2.
Hmm.
So on a lower base, there will be a pickup. cumulative growth will likely not be 18%. That's what she said.
What about the VNB margins? They've gone to 25.1 or
So
something.
VNB margins, what she told me is that ought to have been at around 24.7%. 30 basis point drop in VNB because of
Okay.
surrender value, right? VNB margins is basically equivalent to the margin on the business that you're doing. For all the future business that you're doing, this is the
Yeah.
margin. Now, it was expected to be at around 25%. It's come in at 25.1%. She said it's 40 bips better than what ought to have been the normalized margin, adjusting for surrender value. I don't look at it that way. I get where management comes from when they try to say we've outperformed. But the point, the underlying point there is that we believe that the 25.1% margin is on the lower side. Yes. Can it go up? She said maybe not immediately in a quarter or 2 quarters or 3 quarters, but she's expecting it to gradually inch upwards. There's also product mix involved, due to which this is not happening. Non-par, a lot of pricing pressure has come in. I believe she wants to, or she's indirectly hinted at the fact, and maybe
That
you can
LIC
go.
is aggressive.
Yes, exactly. That the biggest player in the life
Now
insurance space
is
is coming
flexing,
in and
is flexing the
disrupting the
muscle.
market.
Yes.
Yes.
So you're going to see LIC doing a much better Q1 coming in that sense.
I don't know if they'll do a much better Q1 because of LIC's
They come in
size
a
compared to
scale.
HDFC Life is
No,
just
true, but they come
very.
with a scale and the
Yes.
economies which is there,
Yes,
right? In
yes,
that
yes.
sense, so they can push those things much harder.
Yes,
Which
yes,
is
yes.
what about the ICICI Pru?
So ICICI Pru, there was a slightly better bias in terms of positivity, but again, nothing outstanding. So I'll be frank with you. The life insurance numbers have not really, uh, have surely not surprised, but haven't even excited me in any fashion. Because I just feel that they're a very, very muted set of numbers.
Q1 being
Q1.
Q1, yeah.
I, I
But
don't know whether it's
30% growth is
BQ1 or otherwise. That is, sir, last year.
last year.
Last year, Q1, Q2 was 30. This year was just 12.
12.
Just 12%. So,
No, I'm
not
talking
impressive.
HDFC Life was 30%, right? You said
Last year.
last year.
On the base of
Base
30, it's not been
30.
able to grow. That's what
But
she's
that,
saying.
yeah, but again, on that base, you had uh, not only for ICICI Pru but also for HDFC Life, you had the surrender value issue which comes into play in the
Correct.
second half.
Correct.
So the entire product mix has changed in that sense, right?
Correct. And sir, it's not just the growth, no, it's the margin.
Yeah.
Margins traditionally were always higher. ये अभी 200-300 basis points से margin shave off हो गया है. But that is where the concern is, and that is not where the comfort is either. When I was speaking to her, there was no comfort on the margin.
Lombard?
Lombard, again, so Lombard was a totally different beast. What they have done is, because they have a large float. Now, what's a float, right? So typically, how will companies work? They will charge. If I was ICICI Lombard, I charge Sajeet sir for his car. I charge you an insurance premium. I'll take that insurance premium. It will keep accumulating to me over 3, 4, 5, 6 years, right? And thereafter there may have been some damage to your car for which I would have to pay. I would have to reimburse you, or I would have to pay for that, right? So the float, that is the amounts which you are giving me, that is the basis on which I make investment income. So I invest that money and I make investment
And their
income.
investment income has gone up.
Investment income is what has driven the numbers this time. So nearly 200 crore bounce in the investment income, which is why you're seeing a higher profit after tax. So that's one of the reasons.
Where do they invest? Bonds or equities?
So they said that equity investment has driven this times. Of course, bonds would have also driven, I'm sure,
Yeah,
because their
yields have
bond
fallen.
portfolio would have
Yeah,
risen because of falling yields.
Yeah.
But it's also the equity portfolio. So both has given it a bump up. And Citi has in fact hiked their profit estimates for an ICICI Lombard because of this, and they're saying that they're expecting better profitability because investment income has started to kick through. So I asked him that question, Mr. Gopal Balachandran, and he was saying that yes, that has indeed happened. He described how it happened. Maybe we can drop the interview. And he's saying that we enjoy that because as the firm grows larger, we get better leverage from all the premiums that we've earned over the years. That kind of adds to the investment income, which others don't. But that being said, the combined ratio, there was no encouraging sign. The combined ratio is a sign of profitability in general insurance. That hasn't gotten better. In fact, it's above 100, which means that they're actually loss making. And some of the other metrics also not really improving. So there is visible signs of pricing pressure in motor. That's not growing. Growth was flat, like absolutely zero. And yes, health is somewhere that they're growing, but motor they're not. They're degrowing motor, they're growing health.
And they,
So
I
all of
think
those
in
concerns.
motor, basically, they are awaiting the entire pass through of the third party increase in premium,
Yes,
which is expected,
yes,
right?
yes,
And
yes.
so that's something which
That is a big trigger.
big,
So I
big
asked
trigger.
him two questions on that. He said we'll have to wait and watch. He was
We should
non-committal.
we should drop those
So yeah,
interviews of HDFC Life and ICICI Lombard.
yes,
Did you
those
do
are big
ICICI
ones.
Pro as well?
No, ICICI Pro
Pro
didn't speak to
didn't
us.
speak. So these two interviews we should drop in so the
In
people
fact, they've
who
not
listen.
spoken to anyone.
Yeah.
So
Uh, Now the surprise and the disappointment.
HDB.
HDB.
Yeah, HDB was a good one, I think.
Good one.
Yeah, I think it's a good one. So while I still give it a thumbs down because the numbers weren't impressive, but I spoke to you today morning and we had a little bit of banter in the morning at 7 a.m., which I always do with Sajeet sir. It's fun. But point being that see, what they're saying is that Q1 seasonally is a tough quarter,
Yeah.
as is the case with most businesses generally, where, say, for example, agri. If you're lending to agri, it's always a tough quarter, Q1. So they generally lend to rural, which is linked to agri, which is why Q1 is a tough quarter, is what they said, and seasonally will be. But what you're seeing is Q4, the credit cost was 2.4%. Q1 is 2.5%. They say that this has now peaked, and at 2.5% credit cost peak, they've done ROA of 1.9%.
Again, ROI has also come down.
So the
Sub
ROA
2%.
so the ROA is likely bottomed at this point, and the credit cost has peaked at this point. That's what
But
they
the
essentially said.
expectation was that ROI will inch up to 2.2, 2.3 at some point in time, right?
So my very strong belief is, and guys, please take this with a pinch of salt because it's a
Pinch or
personal
bag of
opinion.
salt.
Yeah, maybe a bag of salt. But point is that my sense is that FY26 you will see ROA inch up significantly versus FY25. You will see that happen. It's just that Q1 is a tough quarter. I think the worst is behind, and that's what the commentary also seems to suggest. And they seem to say that Q2 will be flat. Q3, Q4, you'll see good uptick. That's what
I
they're
think
saying.
I think the two stress which is coming in is from the CV portfolio for them and the unsecured portfolio for them. CV revival is something which will
Yes.
push up everything for them, but unsecured, I think they're going to reduce the unsecured
Yes.
portion, right? So
Yes.
so the book will also be not growing at this fast pace that they've been growing in the past.
They're being cautious on unsecured, but I believe that the unwind will also happen equally quickly. Yeah. So if they start to see stress receipt, they'll start lending also fairly quickly because it's an important part of their business. It's a growth lever. As a result of the CV commentary that's come through, Shriram Finance and Chola Finance are also under pressure. So that's the other piece that you want
There are
to
a couple of
monitor.
questions. Let's take the questions actually.
Yeah.
Uh,
Someone has asked on IFCI yesterday also.
Yeah, I'm just trying to see. Four subsidiaries of FCIs are going to merge into FCI, so it's not going to have much of an impact.
Yeah, I don't think so.
Yeah, it's
There's some
it's
optimization.
optimization and rationalization of operations which is there. So I don't think it's going to be, subsidiaries have their own way of working. So I think they're consolidating everything into IFCI. So that's not going to.
Oh, one big thing on HDB. Someone asked a question on margins. So one big thing on HDB is that they're going to see margin expansion happen.
What will lead to
because the repo rate has come down, a lot of their book is fixed rated, and therefore they will enjoy the benefit of margin expansion.
So because the rate cut happened in June.
Correct.
So the pass through hasn't happened.
Yes, that'll happen. Okay. So that'll be a big pass through which will happen sometime H2 FY26.
Okay, so let's look at it's all about the fun influencer led brands have not worked in India. Very true. Tesla at 61 lakhs seems much like that. Premiumization at early stage, but no growth later on. I think some of the brokerages which we have read is that it's a symbolic gesture at this point in time. If the rates, I mean to say the duties are going to come down drastically. then it's going to be a game changer, because then it's going to compete with the Mahindras of the world, because Mahindra is at around 31, 32 lakhs, and this is at 61, 62 lakhs, which is there. So, the differential is the duties which is there. So if the rates going to come, duties come down drastically, which I think Trump is pushing for uh, aggressively there, then you're going to see some kind of competition coming in. And that too, it has to be imported from the US and not from China.
ICICI Group stocks haven't rewarded shareholders 100%, except
True.
ICICI Bank, they haven't. That's a fact. But ICICI Pru, understandably, it's been very disappointing. ICICI Lombard also, actually, understandably, it's been
You know,
quite
there,
disappointing.
I think the AMC IPO is coming now,
Yes.
and that's something which we should be looking at.
Yeah.
ICICI Securities was listed, but they delisted the company and they merged the company through the process. So again, that was little disappointing for some of the minority shareholders, because it went into a court case and all, which is there. Uh, is special dividend of HDFC Bank priced in the current price?
नहीं यार, I don't think इतना कुछ बड़ा होने
दस
नहीं
हजार
वाला है.
करोड़ एक्स्ट्रा है उसके पास ना.
हाँ.
10,000 करोड़ देगा.
मतलब my
10,000
sense
करोड़
is
देगा.
my sense is not more than 20 rupees a share. I
Which
don't
will be
think
how
so.
much?
Which is like 1 year EPS.
No, I get that, but 20 rupees per share कितना amount होगा total में? कितना
Sorry,
equivalent?
1 quarter EPS. Sorry, my bad. So that's like 1% effective.
1%.
1%. So around 15,000 crore के आसपास.
15,000 करोड़ देगा?
I think at most. That's what I'm saying.
10,000 करोड़ तो मिला है उसको, तो 15,000 करोड़ देगा?
नहीं, it's a profitability.
Then it's saying that कि मेरे को I won't be growing for next 1 or 2 years.
No, it's saying I will grow at 11% and my profit should help me sustain my capital adequacy for the next 2 to 3 years.
Okay, there's a question from Vigeen. Anything to watch out for Tech Mahindra results, or is it the same as other large IT companies? I think Tech Mahindra is a totally different. It's part of the large cap, but it's totally different because they are charting a revival path, and I think they are given for FY27 as that 3-year period where they will turn around the company, and I think the new CEO is working on that part of it. But yes, TCS, HCL Tech, these two have so far given us disappointing commentary with respect to auto flows, with respect to utilization, with respect to demand contraction, which is coming in, which they didn't foresee. And telecom is also one of the verticals where the slowdown is there. So Tech Mahindra numbers are going to be muted in my sense, unless they are able to bring in some kind of surprise in terms of, but you need to look at Tech Mahindra from a 3-year period, because the management has clearly said that it's a 3-year period of transition that they're looking at, and at the end of the 3-year period they should be judged based on the guidance they have given. Next is Chash Engineering.
Just engineering, you have a view?
No, I don't have a capex is going live in August. How do you
Yeah,
look at
tough.
overall sector
Even
after?
I don't know. I don't have a
I
view.
haven't seen Suraj the company. Maybe we can look at this company and come back to you if we can. There's could Kartikeya Vashish has a question. Could I argue that soft IT earnings have primed the market for a positive upside on expected line solid results from NBFC's banking rate sensitive sectors? So basically, he's saying that these are the sectors which will be the counter for soft IT earnings. Do you think banks, NBFCs, financial services?
I don't think very strong. I think very strong maybe from Q2 onwards, because the entire price or rate cut will start to accrue from Q2. And then there'll be an unwind also, because all of that pricing will then be passed on to consumers as well. So all of that.
Yes, I think we are coming to an end of this thing.
Yes.
Tomorrow we'll
Sorry,
have a
very
detailed one.
truncated today.
Yeah, there is lots of back end work which is going on
Yes,
that.
unfortunately.
So see you tomorrow.
Thank
Till
you,
then.
guys.